Welcome back to another episode. Today I'm going to take a quick look at Facebook, soon to be Meta, and take a quick look at their earnings that they reported earlier this week and just share some points on the highlights and things I'm keeping my eyes on as a long-term investor. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas, and check out my free newsletter where I'm going to have the highlights of these earnings. So let's see, right now Facebook is trading about 2.4% up on the day. Super exciting news yesterday about the metaverse. That's something we're going to talk about in the next episode where I'll do a little more deep dive into it. But we can see right now Facebook in the past year is up about 15%. Year to date is up about 20%. But we can see from its 52-week high, the stock has definitely seen quite a correction, is down about 15%. Let's take a quick look at the presentation for Facebook. So like I mentioned, they reported earnings earlier this week on October 25th after the market closed. So first, quarter three revenue was $29 billion, and that was up 35% year over year. And it did see it was pretty much flat. It was technically a small decline quarter over quarter. Obviously, some big effects due to the iOS changes. And we can see that 29 billion is pretty much broken down into two segments. First is their advertisement business, which is about $28.3 billion. And then the other segment, which is about $700 million, right? So the biggest portion comes from advertisement. Some other big things to do is family monthly active person is 3.58 billion people, and that's up 12% year over year, and it's also up 2% quarter over quarter. Some other great things: Facebook did repurchase about $14.3 billion of shares. They still have about $7.97 billion left over in their current plan to purchase back more shares. And they just recently approved an extra $50 billion. So this company is definitely going to be spending money on repurchasing shares and giving back to shareholders in that matter. They also roughly ended the quarter with about 58 million in cash equivalents, and marketable securities. So they definitely have plenty of cash at hand. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. So now let's take a quick look at some of the highlights that they reported in their presentation. So first, quarter four, Facebook is going to start to distinguish their markets into two different segments. Outside of advertisement and others, they're going to do Facebook Reality Labs, which is going to be one segment. And this is going to be focused on on kind of their augmented reality and virtual reality, and we're going to see a bit where those segments separate. Another thing that they mentioned is management is going to dedicate significant resources to their augmented reality and virtual reality products and services. So now let's take a quick look at that presentation where I have some highlights for you guys. So we can see the new financial reporting segment will be family of apps. That would be one segment, and that would include all types of revenue from advertisement and others coming from Facebook, Instagram, Messenger, WhatsApp, and other services. Then they have Facebook Reality Labs, FRL. This is going to include augmented and virtual reality related consumer hardware, software, and content. I'm excited to see how that works out in their advertisement business as well, or how much money already is coming in advertisement from augmented sectors, right? Because I'm pretty sure there might be some in that market right now. Some other things we want to take a quick look at. They do mention that there's gonna be an increase in expenses for 2022. A lot of this money is going to be spent in data centers, servers, and network infrastructure. Again, if we pull up this kind of their presentation, they mentioned that in 2021 they expect to use about 19 billion in Capex expense. Or in Capex, where for 2022 they're expecting to use somewhere between 29 to 34 billion, an increase of at least 10 billion on Capex And this is going to be mainly in data centers, servers, network infrastructures, and office facilities. So big news. This is why some of the semiconductor companies were up after Facebook because this increase in money. I'm pretty sure Facebook is not going to be the only one investing heavily in these types of markets, in these types of servers, data centers, and infrastructure, right? Finally, they did mention that their overall Q4 guidance is about 31.5 billion to 34 billion. So it's going to be an increase quarter over quarter. And this does include uncertainties with the iOS changes. So investors should definitely know about those changes. Company is still growing, right? Still strong levels year over year and quarter over quarter. For Q3, we will have to see how that Q4 guidance does and what type of growth they do. But some things to note. So now that was pretty much the highlight, but things to note. First, numerous analysts did decrease the price target after earnings. Most of them kept their ratings, but the price target decreased. Here was one down to 460 from 500, another one to 400 from 425, another one to 390 from 450, to 445 from 455, to 420 from 440, to 410 from 450. I believe to 425 from 450. There were some that might have increased the price target, but most of them kind of decreased price target cuts, and they kept their ratings. Remember, Facebook right now is sitting at 324, and most of those prices are way above the current price. Finally, I do want to mention is they did talk a lot about the metaverse in the days after earnings. We kind of saw Facebook is changing their company's name. I will discuss that on the next episode because that's a whole episode on itself. But some final thoughts for Facebook. This is a tier level high 2. So this is almost a potential tier 1 company in my portfolio. At current stock prices, this is a heavy dollar cost averaging in my opinion. Opportunity wise, stock price has pulled back a nice amount. Even with the stock price being up a nice amount today, I still believe this at current levels is a nice heavy dollar cost average. I do want to say I do own it in my portfolio, and maybe in the upcoming days I might add some more into my portfolio. This was updated 10/29, so today. And finally, one thing I do want to mention before we head out is EV to EBITDA forward ratio. It does seem a bit low, about 12.76, but remember, with the increase of expenses coming up next year, they're gonna see a decrease in some of these metrics. So they might look a little bit cheap right now, but next year they might look a little bit more expensive for those reasons that, hey, they're spending a little bit more money right now. So if you guys do want to see this presentation, or if you guys want it for free, I have all the stocks I'm updating with every stock I'm doing a video on now, and I will be sharing it weekly on my newsletter, and you should find the link down below. So take care guys, have a good night, and see you next time.